Good afternoon, ladies and gentlemen. Our next and last speaker for day one of the mid-year portfolio review is Ryan Wilday. He is the lead cryptocurrency analyst at ElliottWaveTrader.net. So I just want to welcome everyone and thank you for joining us. To all of our live viewers, if you have questions, you can feel free to type them into the chat box and we'll leave some time at the end to get those questions answered for you. With that said, Ryan, I'm going to pass it over to you. Thank you so much.
Good morning, or I should say good afternoon, good evening to everyone. Hope everyone's having a great summer. Some of you may have seen many of my talks. I have been speaking with the Money Show for, about 6 years now regarding Bitcoin and the crypto market. So glad to be back. This presentation will be about 20 minutes. I'm going to do my best to leave about 10 minutes for questions. Let's see, there we go. If you would like to get a copy of the presentation, that is the QR code on the right. I will leave this up for about a few seconds, and I'll turn it back here when we go to Q&A. And then if you're interested in the service at all, the QR code on the left, we do free trials for a couple of weeks, for 2 weeks, and we don't take any credit cards in the process. So you can just let it lapse if it is not interesting to you. Let's see. I've listed some of my calls here. A lot of folks are pretty aware of my work. I'm not going to go through them, but if you do pick up the presentation, then you can check them out. And then disclaimers. Rather than read this, I just want to summarize that I'm very much a proponent for crypto as part of a portfolio. How that fits in your portfolio is really up to you. But more than that, before jumping, knee deep in it or neck deep in it, do a little bit of research, understand its volatility. And I'm going to talk about its volatility here today to get a picture of that, but just understand it's a very volatile asset class and just not right for everybody. That said, I think it's becoming obviously a very important long-term asset even in not just in the crypto market, but also in the in the sort of the traditional finance world as well. All my work is based on the Elliott wave theory. There's a little Wikipedia page that goes over in an okay sense, gives you an overview. So if you're curious about that, but what's more important about this is that the theory states that trends move in 5 waves, they correct in 3, and it's also fractal. So the 5 waves here leads to what we call wave 1, 2, which is sort of fractally similar to the wave 2 here, which is say this precedes a 3rd wave, and most of our trading is aimed at catching the 3rd waves because they're the longest and sometimes the fastest wave. But also there's a lot of mathematical structures to the market that are evident in the wave patterns, and we use that to identify levels where the market may turn. Doesn't mean we're always right, but at least gives us a very objective way to approach the market with entries and exits, which is kind of what we all want in trading, right? So that is how you'll see all of the, I might speak levels, at least from that, how it's derived. What I'm going to do in this presentation is kind of go through a bunch of old slides from this presentation, from my presentations at Money Show, so you can see how I've walked through the market using charts and entries and exit points, and we've done pretty well with this. The other thing is a lot of people that are new to Bitcoin have not ever looked at it from this perspective, from its beginning in 2009 to now. And this was a slide from 2023, so there's a year of price action missing. But as you see the Bitcoin chart from now, what are we talking in terms of years? 15 years. It has just simply been in this march upward from a price of literally 0.3 cents to 73,000 today. I think it was where it's at, or high 60,000s today at the close. So just in this very strong incessant upturns. However, with it, you get these cycles of strong marches upward with these retraces that for now have only lasted a year. In the future, I expect longer, but retrace anywhere from 60 to 90%. I say 60 because there's a few minor ones I'm not listing here that retraces 60, but these are the main ones. And so these are 77 to 90. And a lot of people are not ready for that when they jump in. And that's not to scare anybody away, but I just want to make sure everyone knows what sort of asset they're jumping into if they're interested in this market. I had given in this July 23rd, I had given an area where I expected that retrace to stop and then to find ourselves in the bull market that we are in today, and that's definitely what happened. With I had an alternate for this red C that would take us down to at least to as low as 3K, but never happened. And so the primary view came to pass. And then this is a slide from July 23. And I wanted to explain my charts real quick. We sort of, I call it trade by colors. Basically, blue boxes are sort of support levels, areas that ideally hold. That doesn't mean they always do, but they have a very good chance of holding. And that also gives us sort of like you can enter in the blue box and you have a stop below the box if you want to stop loss in that area. So it's a pretty easy way to trade. And then we'll have yellows are our main profit-taking targets. It can happen on multiple time frames. This is my daily chart where I believe this market, this bull cycle should end between 125K and 180K, and more likely finds itself in the middle around 150 in my experience. And then red boxes are sort of resistance areas where you don't see very many red boxes on my charts today, but those are areas where you may choose to take profit because it's an area of difficulty for the market. And this was a chart from July 23rd, and I had a blue box here. I don't remember what level it was exactly, but in the 20,000 region. And I expected the market to hold this area, although there was obviously a resistance area above it at the time. And then we went into February 24. Now that circle is where that July 23rd box is. Now, to our frustration, the market went sideways for, man, was that about 6 months, but it still held that blue box, but you can see that it got elongated beyond the little space that I had at that time. You can also see that that resistance level did play out. And then we started this run in this March, which was basically expected out of September 23rd. It just came delayed and then continued to march upward. And you could see also that I had another secondary box that was formed on the smaller time frame. And then we found a top. I think it was about 73,000. I should have this memorized, but it was a little bit extended beyond my yellow box. Regardless, you still did fairly well to take some profit in that area because the market has been sort of stuck in this zone for a period of time. Also what happened since this presentation earlier this year in February was that we seemed to be setting up in my more direct path in red versus taking this sort of long detour in the AB. So we have alternates. I have levels. I have objective levels that are colored that say when those levels are violated, then we have to move into the alternate. You can use those levels as a stop if you don't want to find yourself falling into the alternate, or perhaps take some off and then kind of deal with some of your holdings going into the alternate, so to speak, and then get back on the horse when we have a better setup. So there's a lot of different ways, and I teach all of that teach that in our basic service every week in webinars. We hold it weekly, etc. But anyway, so now as we go into today, I'm still holding out 125K. The consolidation that we formed over this box, which ends at 50,600, it also gives us a target in the 88K. So we're basically trading between another blue box, another yellow box. I was in Money Show, let's see, it was May last month at SFO. So I think it was called the Silicon Valley Symposium. And I gave this presentation. This is basically this chart zoomed in. And I was talking to the crowd there, and I literally took this snapshot that morning, and I was talking about the potential of a bottom forming. I love it when I could show up in a presentation and we've got an immediate setup starting to show. And I don't remember exactly where we held, but I wanted to see 6,500 hold, and with a chance that it hold this lower red count. And exactly what happened. So this would be that red count, that red 2 at the time. So held a little bit lower than my ideal box, and then we came up and rallied again. So this is a snapshot today. And so I'm trying to give you that real point in time. Where are we at? We have now, the first thing is I do not like this structure whatsoever, only because it's very prone to chop and also very prone to actually breaking boxes and seeking lower boxes, so to speak. But in terms of Bitcoin, this is a very tight range. I know it doesn't feel that way to people that are new to this asset class. So I still have the same 88 target, which showed in May last month. I have 50,600. I could show you. I'm going to zoom back just so you see that. So 50,600, 88K on top. We're just kind of zooming in with a little bit more price action in the last month. And so we have that target above, we have the range below. And the market has also formed this tighter range here at 62,500. Now it is possible, based on the action, and I'm only going to say possible, that we may be finding a bottom. I took the snapshot last night, and we have flushed. Bitcoin is flushed to form a potential fifth. I would like to see a more convincing fifth, but there is a potential. I'm more looking at Ethereum. They tend to bottom together, is more likely showing a bottom pattern. So we may see Ethereum bottom and maybe Bitcoin hold off for one more low. We'll see. But anyway, it's the same game. We've got a support level 62,500. If that breaks, we've got a support level 5,600. So one can say, take a partial entry here. I like to scale straight through. When I have two support levels like this, I'd like to scale straight through. So I'll just keep buying into a larger support level. 50,600 opens up the door for a much more extended cycle, but it also gets scary because the next support levels are way down at 30. Right now, again, look at the market. It's dodging support. The main support, basically the main swing support, 50K, it's dodging it, struggling to get back into it. So it doesn't open up again until the 62,500 breaks. And if we set up impulsively out of this area, then off to 8,800 we go. There will be another correction after that on the way to 125K, which I haven't mapped out clearly yet, but we'll see where that level that we find a top up in this area, and then I'll be able to show support probably back in the 60 area. So there's a lot of ranges that are going to go on in Bitcoin. But also the main message to also include here is if we go back to this slide, this bull cycle is getting very mature. It's certainly possible that it exceeds the target of 188. And at the same time, as sort of talking out of two sides of my mouth, there's still a lot of profit to be made in sort of the large, highly volatile ranges that Bitcoin puts in during these bull cycles. So again, we're sitting here at 60, the 66K range. A run up to 88K is like basically 30%. How many asset classes when they're getting close to their major top are going to give you another 30%. And at the same time, even after we find this 4, which again, it's not a level that I can give you very precisely, we'll see another run out of this that may even give us a double. Sorry, I got to pick up my mouse. So again, just to summarize, we have a market that is a cycle that is very mature. If we take this look back at the bottom in 15K, 15.5, and we look at where we're at now, we're a lot closer to the end than we are to the beginning. Yet at the same time, we can still continue to get profit from it, and using these levels. Now expect as we start to reach for 6 figures. I mean, 6 figures has been a long expected target for myself, but even more important out there in the crowd. I'm even starting to see people call for 250, 300, 1 million. I certainly expect to see 1 million Bitcoin someday, but I expect first we get a very large bear market commencing from the somewhere between 125K and 108K. So my air of caution there is just be careful as you hear voices. I think we all know, hopefully most of us know now, that when people are loudest and most bullish and also pounding the table, then you have to be far more cautious about the market. And believe me, we're starting to hear it already, and we'll hear it very loudly as we get there. So again, summarizing, we're getting mature. I use Fibonacci's based on the Elliott wave theory to show levels that are great for entries, great for stops, great for profit taking. My trading involves just scaling in and out in between these boxes, especially now that we've run into this very mature market. And then lastly, I find that in the money show, a lot of folks, they really prefer to stay in their brokerage accounts. They're not comfortable with crypto. holding wallets, learning the security regimen necessary to trade crypto. But we've got these great things called spot ETFs. Now, how does my service relate to these? I have declined to keep a chart on every single one, because now that we have 12 of these as listed here, it is impossible for me to cover them. Particularly, they don't have the history to make the projections I need in that I have in Bitcoin. So I have to do calculated Bitcoin charts for each one. So basically, I give basically sort of Bitcoin per share for each one. And so if I have say a level, I'm looking at a key level of 67,500 roughly for the local support, and then 50,600 as I shared for the larger swing support. Simply all you have to do really is just calculate the Bitcoin per share. And I check the, and then so you get the level times the Bitcoin per share, and you basically get the level for your ETF. So you can basically adjust your risk, position sizing, and all of that according to these levels. Even if you want to just trade the ETF. So it's great from that. I trade the ETFs as well. I do it all based on the Bitcoin chart. I also want to juice up my stock portfolio with Bitcoin here and there. Most of my trading is with the coin, the spot, but I do a little bit of futures trading, a little bit of spot ETF trading as well. So in summary, again, I expect Bitcoin to end the cycle near 125K, extension to 180K is possible. Taking some profit is wise at that level. If you plan to hold long-term, decide how much you will hold now. That's something I always advise people. Okay, I'm going to hold like 10% of my net worth in Bitcoin even after the bull market tops. But I have that decision locked in right now. I'm not going to change that decision to get closer. A lot of people will struggle with how much they hold, as they've seen this asset run all the way to 100K. They might be tempted to hold it all and hope for $1 million. Be prepared now for that decision. Locally, again, Bitcoin is expected to hold 54K, and as I shared as of this morning, it's possible we hold a lot tighter, and then I expect to run to 88K before the next weeks to months long consolidation, which are becoming very normal. And then if you're not comfortable with Bitcoin, not comfortable with holding spot ETFs, the new ETFs are a great way to profit. And then as a little bonus, I would advise, if you're interested at all in the service, I would advise following me on Twitter. There's my handle. And once a month, the third Saturday, I hold a free webinar. And then a couple days later, Elliott Wave Trader will tweet out a link to the video. So you can either see it live on basically 11:30 Eastern time on the third Saturday, or you can wait, follow Elliott Wave Trader as well, and then get a copy of the video. It usually takes a couple days for them to push it out. All right, and I'm going to go back to the QR codes and then take questions. And you can, if you didn't get a chance to snap the QR codes, you can grab them now.
Okay, thank you, Ryan. We do have some questions. You were just saying ETFs are a good option for people who don't want to directly invest. Would you recommend IBIT ETF for Bitcoin?
I wrote an article about how I evaluate the ETFs. I personally, in my ETF purchasing, you may not feel the same way. I wanted to support people that have been native in the industry, so I have held HODL, Fidelities, and ARCBs, because these are firms that have been in the space a long time. I just don't have a trust of BlackRock yet. I don't have a trust that they're trying to take a little bit more control of the Bitcoin market. And that's maybe a little bit of conspiracy theory, a little bit. I consider myself a little guy, even though I've made a lot more wealth in this space, and I'm just skeptical of the big guys. That's my take. Is there anything wrong with IBIT? No. However, it has higher fees than the other ones that I listed too. So last I checked, unless that's changed. So if you want a lower fee fund, Fidelity, HODL, and HODL is VanEck, and then Bitwise is the other one I have, is also lower, as I recall. Double check me on that one. So you kind of want to maximize your fees, right, or lower your fees so that they're maximize your return.
Well, that makes sense. We also want to know, if an investor only wants to speculate on Bitcoin price without actually owning Bitcoin, would BITO be the best instrument to do that?
But BITO's all right, or BITO. It gets crazy in terms of math. It gets a little weird in terms of math, because one, it's in futures, not spot. That's really great at a bottom because sometimes futures go into backwardation briefly and then go normalize into contango, which gives you a little boost if you if you tick the bottom. But second, you end up getting paid a dividend, and that dividend has to be reinvested to match Bitcoin. So basically, because it holds futures, it rolls the futures and pays off a huge capital gain. That is not excess gain; it's just simply roll gain, and they have to pay that off. And so, if you don't reinvest it, you'll actually underperform Bitcoin in a bull market. You'll perform better in a bear market. So you just have to know these ins and outs. Honestly, most people that understand roll decay and contango versus backwardation, just keep it simple and do a spot ETF. So it's up to you. Like, depends on where you're at in terms of your understanding of these mechanics.
What major support and resistance levels do you see for Ethereum in this current bull cycle?
Oh man, I like so I have traded Ethereum less this cycle because it's underperformed so badly. And so I have recently kind of cleaned the deck and have a lot less Ethereum in my portfolio. Wrote an article about that as well. Um, let's see, I'm trying to go by memory. I know we have a local 3,500 and it's possible. So it's possible it bottom ticked this morning. But if I recall, if that breaks, and I think it's a reasonably likely to break, then I think it was 3,400. But man, I don't have the chart in front of me. So you're asking for my 50-year-old memory that's worked for me. Um, yeah, but I mean, again, despite that, and I do have a target of 10.5, but if someone was to say I'm a betting man, so tell me what would you put more money on? Bitcoin hitting 125K or Ether hitting 10,500? I would say Bitcoin hitting 125. Now 10.5 in Ethereum is a bigger risk to reward. The problem is I think the probability is starting to drop because of the underperformance. But we'll see. I keep watching for setups to change my mind. It has time, but hasn't done it.
Yes, something to keep our eyes out for. Now, how do you deal with taxes with all the in and out moves of Bitcoin?
I mean, if you do an ETF, it's easy, right? Because they give you 1099. This is not tax advice. What I do is if I'm doing decentralized finance, I track every single transaction. I just don't do many of those. And then with my spot account, I just take my transaction history. I only transact in dollars. So I just take it and throw it in a spreadsheet. I download them all, throw them in a spreadsheet, and I can add them all up. And at the same time, I do something where if I segregate accounts by short-term, long-term. So short-term, if I'm loading a long-term wallet, I just track all of those purchase prices before I load it into the wallet. And so those will be long-term gains way down in the future. And then for short-term gains, I segregate that account. And so I basically sell it every year. So I have a beginning balance in US dollars and an ending balance in US dollars. And then I check that against the spreadsheet so that's a lot of machinations. I mean, if you're not up for that, there are software like Coinly.co. I've just seen problems in the software. So I do it by hand. That's not for everybody. I mean, this is my way I make a living. So I'm willing to do that, and it's very profitable for me. But yeah, you have to be up for that, right? And so you may choose to do an ETF so you can get that 1099 at the end of the year.
Yeah, it's a lot to keep track of. Even if your memory is 50, it sounds like you are staying on top of it to me. And then we had a couple questions about what about Solana?
I made a call recently that it's going to go soft. I don't have any support levels for you, but it's going to go soft. That it's had most of its run. I think I think it's something like 400. There's a chance it can get another high at 400, but I've cut back my Solana because it's expected to be soft now. But I don't have the levels again. I don't have the chart in front of me.
Okay, I think that we've run through our questions that we have here. I'm not seeing any more. We could see if a few more come through, but thank you so much. I mean, I definitely got a lot out of your presentation. It's one of those topics that you definitely want to keep a pulse on today.
Cool. Thanks, everyone. And again, visit me at Twitter or Elliot Trader if you're interested.
Okay, we did have one more question. I think we have time.
Sure.
Are you there still?
Yep.
Okay, how do you rationalize the continuous cost of energy for Bitcoins?
I would advise I would strongly advise if you're on that wavelength, I guess is better for lack of a better word. Let's see if I can find a good search term. Look up, maybe it'll come up with Bitcoin mining, Africa energy. And how do I say this precisely? Bitcoin mining has become a buyer of energy at last resort. So if let's say you put in a wind farm. The wind farm has two problems. One, it doesn't always produce. And number two, when it produces, the demand may not be there, right? So Bitcoin mining has because Bitcoin needs low energy costs, or it's not simply not profitable. A lot of Bitcoin mining has happened now around alternative energy sources in such a manner so that when that demand side drops off, and batteries are expensive, so please don't tell me that batteries are a good replacement for this. There are other technologies that are coming that are a little bit better than Bitcoin mining, but so the Bitcoin tends to buy that energy. So what's happened is it's been less prevalent in America, but there have been places in Africa where you can imagine Africa, they have areas of low population, but they want to start building a alternative energy infrastructure. And what has happened is a lot of the public Bitcoin miners have gone into those spaces, say, okay, build your energy, and we'll cover you for the demand that's not there. And then as that demand comes up by population growth or whatever, of course, we're going to be phased out. But so think of Bitcoin as, explore this topic. Think of Bitcoin as the enabler of alternative energy by being the buyer of last demand. And you'll start to see it from a different light. You're right that it is I mean, honestly, Bitcoin mining is probably going to be nothing compared to AI model, compute power going on in the world today. It's nothing compared to that. And try to stop that train. But Bitcoin is providing this very interesting function of basically this buyer of last resort, so that these projects can last. And it's again, just there's some great videos on it on YouTube. So I don't know, type in Bitcoin mining alternative energy Africa or something like that, and you'll get some of these videos. And just meditate on it a bit. If you don't understand it, dive into it, and it'll change your view. And if it doesn't, you don't get it. To be honest, I'm going to be very frank. You don't get it. You haven't taken the time, or you're biased against it. One of the two.
Okay, so we all have a little homework to do. We have a couple more that are coming in. Let's see. Do you think that Bitcoin will hit 88K before November? Do you have a timeline for that?
I don't do time work. It's too fraught. You can have something like you saw my chart earlier where, I talked about holding a level, but then instead it took 6 months to actually break away from the level, right? That's how timing works. It looks reasonable. I mean, if I was just to guess, I think November we will be there and then some, or we will already be in the next consolidation. But that's just a guess. It just looks that way. It keeps the market's trying to get there right now. But just the question is whether it's going to hold all the micro levels to get there.
What do you think for the cycle top for Ethereum? Going back
Well,
to
I mean, classically, Ethereum, I mean, in terms of time frame, tops like 1 to 2 weeks after Bitcoin. It's weird how that works. Of course, we only have like 2 data points or 3 data points. So and now I don't have a timing on Bitcoin. I mean, I think like I thought it was going to be this year. I'm doubt it's this year now. So that's again timing. I'm always over optimistic about time frame in terms of getting my money fast, and it's always draws out. But I've had this target again. I said it earlier, 10,500 on Ethereum. It's still viable. I just have big questions about it, and then the question will be, where does it top? Well, below that. I mean, that's all I can really say. Like I'm just tracking it level by level. It's just very underwhelming right now, and we potentially get a setup where it starts to try to outperform Bitcoin, but it's coming very late in the cycle, and that's not really typical. I know for myself, I hardly use Ethereum now. I do a lot of decentralized finance trading, and it's just a very arduous network to use now compared to Solana. I'm a heavier user of Solana. Now the base network, which is technically a level 2 Ethereum, which is put out by Coinbase, it's pretty good. Ethereum mainnet, I have no interest in using most of the time. So is that why it's starting to underperform? I don't know. Because people are using it less. I don't know. I'm not sure, but it's just feels like an old technology to me right now.
Okay, and I think we have time for one more. From an EW perspective, do you need a minimum amount of time for it to be applicable? Especially with crypto, there's a lot of new projects and tokens every day.
90, so it's interesting with take altcoins. Bitcoin is the only chart that's really high consistency over cycle to cycle. Ethereum has um forced me into alternates multiple times, multiple altcoins, altcoins like, but basically 90% of them fail after one cycle. So we're grab and go. We maximize our return on an altcoin while it's in the cycle, and then I just coach people. They are not investments. These projects are experiments. The next experiment will be better than the one that you're in love with. And I've watched many subscribers not take that advice to their detriment. So now in terms of time for a account to be usable, that it just depends. Like, some people know whoops, that's my alarm. I gotta go. This is probably the last question. I gotta run, but got a hard stop. But if you know
Yes.
dog with hat, it's a meme coin that's kind of silly. And we basically caught that for 20x trade, 20x multiple in a month, if you know the coin, and just by following blue boxes. I think that coin may not finish 5 waves. It may top in 3, which is, again, that's a sign of weakness. It's a lot of altcoins do that, but it doesn't matter because it gave the 5 wave setup in the beginning. We grabbed it and we milked it, and then the levels that we offer these blue boxes. When I say we, my colleague Jason and I, those are where it breaks. So we know where it breaks, and so it doesn't really matter if it fills the entire pattern out. We take what we can get, and a lot of times in altcoins, that's amazing gain. Like you cannot see in the stock market, but you have to have the open mind to say, okay, this can and will break, and I have to be ready to stop out. And if you don't have that mindset as a trader, it's not really the right area to play. Go Bitcoin. Just stay with Bitcoin. Put 10% of it in your portfolio and just call it what it is. And then when it's dropping in a bear cycle, add to it. But if you want to trade and swing trade with the altcoins, you've got to treat them like they're not investments. They're just honestly financial junk. To be honest, I mean, wolf or dog with hat is just junk. But people love it right now. They're interested in it, and we'll follow it because it's sentiment. And Elliott Wave is all about tracking sentiment mathematically. That makes sense.
Well, thank you so much for your insights and your time, Mr. Wilday. We really appreciate you being here with us. And yeah, thank you.
Yep. Thanks, guys.